Today we're going to talk about interest rates and where we're at right now in the economy with interest rates. So interest rates are up, as everybody knows, right? So rates right now on land are probably going to be in the 7s, approaching 8%. Houses are probably going to be 6.5 to low 7s, depending on your credit score. But what's interesting is you have a lot of government-backed lending institutions like Farm Credit, like Rural First, that will lock your rate in on a raw piece of land for 15, 20, or even 25 years. They tend to offer the most aggressive interest rates. When interest rates are going down, they tend to beat other traditional lenders to the bottom on rates, and you can typically get a much lower rate for a long fixed term that most traditional lenders can't compete with. But with interest rates climbing, those types of lending institutions like Farm Credit and others will have their interest rates will climb faster. So right now it's kind of unique in that you can go to a traditional lender and get a lower rate than you can with some of those federally backed rates. Now, why is that important, or why would you even think about a rate? Because right now, with those traditional lenders, they're only going to fix that term for 5 to 7 years. It might be financed over 20, but it's only going to be locked in rate for 5 to 7. So, in my opinion, though, what we're going to see is that within the next 5 to 7 years, you're going to have a higher percentage chance to see rates go down than we are go up. So it wouldn't scare me at all to go somewhere and get a 5-year fixed, knowing that I'm going to refinance it within the next 5 years to 7 years, and I can lower my rate, and at that time, if I want to get it fixed, go ahead. So don't be scared to use an adjustable rate right now, because within the next 5 to 7 years, we're going to see rates go down. So don't be afraid to go out and grab that adjustable rate, especially if it's cheaper and you got less paperwork and you got less upfront costs and closing fees when it comes to that. So always be shopping around for the best rates that fit your term the best and what your needs are. But right now, I wouldn't hesitate at all to take a rate on a adjustable rate mortgage, because I know in the next 5 to 7 years I'm going to be able to refinance that at a lower rate.